Welcome to TheoTrade. This is Don Kaufman. It's March 13th, 2018, and you thought volatility was dead. With just about 8 minutes to go in the trading session, we've got a lot to go over in this evening's video. As I said in last night's video, look for some continuation of volatility this week. Again, a lot of people are high-fiving one another. The S&Ps rallied back quite a bit last week, but here we go again. And what really stands out today isn't necessarily the fact that the S&Ps are down some 20 points. And mind you, rallying into the close here, it's the range on the trading session. So we actually traded this morning all the way up, and I'm going to zoom in very tightly here. We traded all the way up to 2807. It was the CPI data that came out early this morning that actually spiked futures. We faded back. But people, as I said this last week, and I'll say it again, this is the marketplace that traders just live for. It's two-sided trade. But I don't want to rehash a lot of what we went over. Again, we saw volatility coming. How did we see it? Well, there's a couple of things that really stuck out in the last couple of days. One of those happened to be the expected move in the SPX. The other one that I pointed out last night happened to be the VVIX, which once again is bid up. But more importantly than just pointing out what is or is not a volatile market, again, we expected some sell-side activity to come in, as we denoted last night. More importantly than that, we discussed a lot about mega market caps, and this has been a trading session. Again, if you take a quick glance, I'm going to freeze the screen here for a moment. Take a quick glance down my left sidebar. This has been a day all about what I call mega market caps. Mega market cap, what does that mean? A Microsoft, all right, which belongs, in the $500 billion plus club. Apple seeing some fairly heavy sell-side activity. Facebook is right there. Google kind of getting decimated on an intraday basis right along with Microsoft. As I said, it's all about these mega market caps. In fact, if you take a look at Google, again, this thing saw some really heavy sell-side activity, getting a little bit of a bid right coming into the close, but nothing really to speak of. The damage is already done. The interesting aspect of today's trading session, though, is the entire market is not necessarily down. There's actually some fairly bright spots, in terms of retail. This is just about those heavy market caps. Now, some real specific trades that I talked about yesterday was looking for follow through to the sell side inside of Netflix. We've been spot on with that, and we are carrying short positions in Netflix. I also continue to maintain short positions inside of Caterpillar and Boeing. Both of those have which seen reversals today. In fact, if you take a look at Caterpillar, talk about a wild day of trading. Like, people, this thing is Caterpillar, and it's trading like a wild tech stock. And of course, a Boeing, which again, I carry a number of short positions out of Boeing. Boeing has the single largest impact of any stock by far, specific to the Dow. So if you do look at the Dow and you're like, wow, this thing's down almost 200 points today, you can thank Boeing specifically for that. Now, we looked at Netflix, we look at Google, we talked a little bit about volatility, but let's take a deeper look into volatility, because there's one thing that I do want to point out moving forward, and then we're going to throw a trade your way. If you take a look, and I'm looking specifically here at the volatility futures. This is volatility futures, and if you're on thinkorswim, great. If you're not, no problem. But on the volatility futures, go over here to all, open them all up. First thing you got to do is forget about the 8-day volatility futures. They're as good as dead. All right, we stop looking at them. We want to see vol futures that have got, again, about more than that 20-25 days to expiration. And what I want to show you, and this is important, look at the 36-day volatility futures. Forget about these weeklies and compare the 36-day volatility futures out here, to the 64-day volatility futures. Why? What am I looking for in this? It has to do with what we term contango and or backwardation. I've talked about this extensively in the last couple of weeks in the midst of some fairly heavy volatility. And we got caught up in the midst of some backwardation for a while. And what backwardation entails, it entails that the short duration volatility futures actually exceed the longer duration. I'll give you an example. Okay, these 36 days could be at like 18, the 64 days, for instance, at 17. And what that implies is the risk is it's on, it's now, it's here, it's in the here and now, and then that risk is actually going to abate in the future. Okay, well, we're not seeing that right now. We've actually, and again, this is a backwardation. We've dropped into a contango, and we've been in the contango since, again, last week during some of the rally. What we want to see, though, as this week progresses is, number one, do the volatility futures flatten back out? Or number two, do they actually cruise back into the backwardation? So we've got about, okay, 30 cents differential between the 36-day and the 64-day. And I'm telling you, this stuff is gold. Why? Because it's going to tell you, all right, ultimately, do I put my helmet on, get under my desk, and rock back and forth? Well, you do if this thing drops back into a backwardation, because that could get a little bit nutty. And that's something that if you see any sell side activity tomorrow, it's likely that we do that. In fact, I'm kind of surprised, given the whacking, if you will, that the Nasdaq is getting today. I'm kind of surprised. The volatility futures, you know, in my opinion, they're pretty mellow. I mean, they really are. Maybe they won't be so mellow if Amazon ultimately takes it on the chin, you know, in the coming days. Again, this has been a market in just the last, you know, 2 trading sessions. It's all about mega market cap. Like, everybody's forgotten about everything else. All they're focused on right now are the Amazons, the Googles, the Facebooks, the Apples. Netflix is playing into this. Netflix may have a $140 billion market cap, but Netflix has become so volatile that its $140 billion, you know, market cap is getting thrown around like a toy, and it's starting to influence the Nasdaq almost as much as some of the bigger market caps because of that expanded volatility. Now, quick trade for you. So Tesla saw some pretty heavy sell side activity, bounced back up, fading into the cash close. We just have about a minute left in today's trading session. The trade inside of Tesla, okay, is a very straightforward idea. All I'm doing is I am going out and I am selling, again, selling an out of the money call spread. Now, we'll open up a bunch of strikes. You can see I've got a position here by selling this call spread. I'm just going to right click on the 375s, come up to sell and over to vertical. Okay. There's no, you know, gimmick about this. Listen, it's a $5 wide spread for $1 credit. That leaves you $4 of risk. Okay. Why would I consider selling the 375, 380 call spread? Well, first of all, it's a trade that I've now done a number of times and had the trade be profitable a number of times. Why do it again? I don't know. Repetition seems to work for me. All right. The trade's really, again, kind of a straightforward idea. So it's a 375, 380. There's the closing bell, 375, 380. So you got to get up into this neighborhood right here to really start to take some heat. And I don't know about you, but I'm thinking to myself, that's a long way to go, all right, to be ultimately to take some heat. Could it happen? Sure. I mean, here's the all-time high inside of Tesla. Anyway, we've been able to produce the same spread month in and month out. I'm not trying to make the full buck in here, okay? Do a couple of contracts. I filled most of mine right around $1 or $1.05. Again, between $1 and $1.05 is the contract size that I traded inside of this spread as the day progressed, okay? If you take a look at this from a probability of touching standpoint, there's only a 45% chance of touching my short strike. Now, for those of you that have actually been through like the credit spread class, that's important. The probability of touching is below 50%. You're not going to have to sweat too much on this spread. And we're trying to make not the entire dollar, but a decent percentage return on that. And ironically, right after I place and I fill this trade, I'll turn around and I'll actually place a good till canceled order to buy back the spread, okay, at a profitable level. So the S&Ps just closed. Again, volatility, you know, everybody's thinking it's dead. S&Ps have a wild ride today from high to low. You're looking at about a 45-point range. The Nasdaq, I mean, again, do some quick math over here and you're starting to recognize, you know, 150, 170-point ranges. I told everybody last week, look for wild ranges in the Nasdaq. All right. Why? the margin requirements of the Nasdaq futures have gone up to 7,700. Even at the exchange level, they're getting a little nervous out there. Thanks everybody for joining us here at TheoTrade this evening. Have a wonderful evening. Bye-bye.